So tonight, Joey and I are going to talk about how to identify red flags before purchasing a property, because ideally you want to identify those issues before you close on a piece of real estate. And that's how you save money, right, Joey, in this business?
That's right.
All right.
Because if you don't do your due diligence, oh boy.
I have a lot of stories about, well, not too many. I mean, I learned only a couple times to do my due diligence the right way, but I still learn all the time. I was buying lands the other day, about 6 months ago, and I didn't do the proper due diligence on the HOA. It was kind of confusing on what was owed and which the HOA was. And I ended up actually decided not to close on the property. It was just some land, like a small land purchase because of the HOA. But man, there's like crazy amount of due diligence for a little piece of land. And I realized, if you're going to buy real estate, make it worth your while, because you got to do your due diligence, whether it's a small piece of land or a large apartment building. You flip houses, you do smaller multifamilies, you're getting the larger space as well. I'm more on the apartment building space, although we both have experience flipping houses. And so I'm glad to have you on here tonight. Talk a little bit about yourself. Just give a quick introduction if you can.
Yeah, so I've been a contractor, guys. For the people that don't know me, I've been a contractor for the last 18 years, 19 years actually. So like Aaron said, we've been flipping houses since 2017. We own about 60 units of multifamily right now within New Jersey and PA area. We have 76 units LP, and we're currently doing 208 units GP. So we also own a kitchen cabinet store over here in Garfield, New Jersey, and own a restaurant as well. So, into a lot of different things.
What restaurant do you own?
It's a place called Jersey Gourmet. It used to be called DNK Buffet in East Orange.
In East Orange. Oh, wow. What's it like owning a restaurant?
Horrible.
The hours must be terrible. I mean, you're like, right?
Yeah. So I don't actively work in the restaurant anymore, right? I did growing up. Mm-hmm. So it's kind of a family business, and I hated it and never thought I would ever do this, but the opportunity came up, so I took a percentage ownership. So I'm more of a passive investor in the restaurant. Mm-hmm. All I do is go there, grab some free food, and and make sure things are kind of clean here and there, and get out.
Wow, sounds amazing. Sounds like a good old time. That's nice. That's nice. All right, well, I'll have to stop by sometime and see if I can get a free lunch.
Thank you.
No such thing as a free lunch.
Well, we're gonna have the event this coming Thursday, so that's where it's being held at.
I'm excited. So I'm also speaking at your event on Thursday. We're doing a double whammy this week, and that's exciting. You'll be getting plenty of me. We're going to actually have kind of a similar topic than Thursday night about underwriting apartment buildings.
Yep.
It's going to be different, but we're going to touch on that certainly tonight. But maybe for our guests who can't make it out to East Orange on Thursday night, they can get a little taste of it now, or they'll get more of a complete version, I'd say, Thursday night. And of course, going out for the networking and the food is what it's all about, man. There's nothing like going out and networking. I really enjoy it.
That's right.
Yeah, definitely. So that's Thursday night in East Orange. Definitely check that out. But for now, let's focus on our topic here: how to identify red flags before you buy a property, so you don't lose your deposit or buy a bad property, or heck, even if you do have to lose your deposit. Well, maybe I'll tell a little story about that. And about, hey, sometimes you got to make a decision, and even if it's late in the game, you got to make a call. And that's part of identifying red flags and being a savvy investor. So you want to always watch out for that. So I'm going to start with your questions. Okay.
Sure.
All right.
I'm ready.
Okay. You ready?
I'm ready.
Woo.
Come on, bring it on.
Number one, where and how do you find subcontractors you want to work with?
So a lot of different places, obviously, right? First of all, you can start off with asking your friends, referrals, right? The best place to do is to get referrals. Okay, so friends that are in this space, they obviously are going to give you some referrals. So I get referrals all the time from different house flippers, apartment guys that are using bigger more sophisticated contractors, not these contractors that are kind of like waiting at Home Depot for you to pick them up. So we're not using those guys. Okay. So that's one place, first of all, to find it. And then another great place to find contractors are lumber yards.
Okay.
Go talk to your local rep at the lumber yard. So if you have a rep, right? So I use, like, for example, one of the lumber yards I use is like Kukin Brothers. So, I have a rep there that he services my account. And, whenever I need something, hey, I need a framer, can you give me a reference to a framer? I need a sheetrock guy, so he knows guys that order from him. Right. So basically, and these guys are obviously, you still need to vet them, but these are the guys that are ordering products from him. So they do have business. So that's kind of two easy ways to find contractors.
Good. Yeah, absolutely. It's funny. I've never picked up the gentleman, the day laborers there at Home Depot, but I have written down the numbers on trucks there, or meet contractors. You kind of see them there a number of times. They're doing jobs in the area. So that's another way too. I've snagged some good contractors. Just the going to Home Depot in the markets I'm in, and there's, especially in the morning, right? There's a ton of contractors that you go there like 7:30, 8 in the morning, right? They're all coming in, and those guys are busy. They're doing jobs in that city, right? So you want to probably team up with them. If you write down 8 phone numbers, chances are one of them is going to be a pretty good fit for you, hopefully more than that. Yeah.
Absolutely.
Cool. All right. Question number 2. How do you build out a scope of work?
All right, so this one is gonna be a little bit more diverse, all right? Obviously, it depends on what kind of project you're doing. So if you're doing a much larger multifamily repositioning, right? There's obviously gonna be a lot more bigger scope of work, and you're gonna actually have a team to help you. Other, general partners that are gonna actually help you. So this is a team sport, right? So with that, you're gonna basically walk the property. You're probably gonna have the property manager there, and your other general partners, and you're gonna walk the property and basically kind of go one by one. You're gonna go do the exterior first, your parking lot, and then you're gonna move to the inside, the apartments. So that's the way we kind of start. You're also gonna have a due diligence company that's gonna come in and kind of go through in detail each apartment, and they're gonna tell you, hey, apartment 1, has this kind of paint, this kind of appliances, things like that. So now it's up to you to say, hey, are we going to upgrade these things, or are we going to keep it the same? Or just kind of bring in something new.
Sure.
Not so much upgrade, but replace the same thing.
Yeah, freshen up the vanity.
Yeah.
Some panel walls. Yeah.
Right.
Try to update lighting, maybe.
Yeah. So that's on the larger multifamily side. On a fix and flip, what you want to do is, if you're on a project like that, you're kind of on your own or with a partner, or you're walking for the first time with a realtor, maybe, so then it's kind of more up to you to kind of walk through the property and kind of figure out what the scope of work is on that one.
Yeah. And the challenge with fix and flips, of course, are you really start digging into the walls. You're looking at, electrical, plumbing, and you can only test that stuff so much.
Right.
Especially for these older homes. You buy a home that's built like 1930s, something like that, turn of the century, like forget it. Anything that old is probably going to be new. Even if it passes an inspection, you turn on the water and it's not leaking. If the pipes are 50 years old or 80 years old, you're going to expect a lot of issues, because you just open up those walls. You're like, oh my God, this thing's about to fall apart, or this is not going to pass code, right? You bring out the inspector and the electrical is way out of code. You replace one part of it, then you got to replace all of it, and so, man, you start getting into electrical, plumbing, that's where it gets really dicey. I just try to with the apartment buildings, we try to buy buildings that we're really just putting paint on the walls. We're refinishing the floors. We're doing a fresh vanity in the bathroom, some updated lighting, maybe updated appliances, stainless steel appliances, granite countertops, a nice touch depending on the class of the property. And but even the cabinets, we'll sometimes rip out the cabinets, but for the most part, we'll also, if they're decent shape, we'll make them slow close cabinets and then put upgraded hardware on them. Right? Just keep the boxes, keep the doors, just upgrade your hardware, make them slow close so they kind of look and act like they're new cabinets, right? Give them a fresh coat of paint. And that costs something too, because you got to do it all nice and right. But you do save money. Sometimes it actually, depending on how rough the cabinets are, you're better off just ripping them out and putting new ones in. But that's the whole thing of the scope of work. You go to each unit, right? And yes, that's the process. Okay, let's get into the next question here. All right, what does payment structure look like?
So again, this is gonna depend again on what type of project, right? So generally, if you're gonna do a project under $100,000, you want to split it up to, let's say, 4 payments. So you're gonna have milestones on each payment. Whether it's let's say if it's a fix and flip, generally you're under $100,000 unless you're doing a gut renovation. So you're gonna basically base it on the milestones, and a lot of those can be during inspections. So you have, let's say, a rough framing inspection, you're gonna get a payment. After the plumbing and electrical inspection, you're gonna get a payment. After the flooring is complete, you're gonna get a payment. Things like that. So base it on those things, and actually base it on 2 or 3 criterias of the milestone. So it could be after flooring is complete, after cabinets are installed. So they don't try to kind of get around that and just do only flooring and then nothing else is done. Sheetrock's not done, and floor's in. Excuse me. So for the larger ones, that's a little bit tougher, because some contractors are a little bit more sophisticated. So you're probably gonna have different contracts to sign, a lien release, or lien waiver, either one, things like that you're gonna have to deal with, and that these smaller contractors don't deal with. You might ask them for a bond, which a lot of these smaller contractors don't deal with. They don't even have, honestly. So those are some of the things that I learned as a contractor doing government contracts in the past. So just having those items. So basically it's kind of the same way. It's what you're comfortable with on a larger scale. Let's say if you're doing a $1 million project, how much are you going to give up front? What are the milestones, things like that. So you can break it up into big chunks of payments, like $100,000, $150,000, depending on, again, the milestone. So it'll all depend on that.
Yep, the lien waivers are very important. Yeah, and the tough thing about smaller contractors is they're not really going to want to sign lien waivers or understand them. So and then you get into the bigger jobs, you really do need that. And for our listeners out there, so a lien waiver is a document that you have your contractor sign and you sign that says, hey, I paid you this amount. I paid you the 25,000, percentage here. So now we're done with that chapter. You're on to the next part of the project. But you can't put a lien on my property saying I didn't pay you this money, because I did pay you this money and this document says that, and we're both going to sign it. And that makes everyone on the same page, right? That's what a lien waiver is. Okay. Good. Yep. So they protect you, they protect your contractor, quite frankly, because it's confusing. You have change orders. Change orders are like the name of the game, like you may and so a change orders when you run into some, oh my God, the windows we need 6 more windows than we thought, or whatever. So there's always change orders. That we ordered the wrong size tub or whatever, So whatever it is, it's constant. Like good contractors, though, they have less change orders, right? That's always the goal, I'd imagine, right?
That is the goal, but I find that honestly, it's probably the opposite. Good contractors know when to hit you for change orders.
Oh yeah, that's true also, right? The worst contractors I've ever worked with are the ones that said, don't worry about it, I got it, right? Hold my beer. Like it's it's terrible. Oh my gosh. I had one contractor that said, you know what, you should just cut the whole place and I'll do it for this price. And we're like, there's no way you can do it for that price. And it turned out we were right. And after she cut it more than we wanted her to. So you always want to lead your contractor, but then again, you also want to listen to them when the walls are opening up and things are going through you. That's the trust part, right? I mean, it's so important to have that trust there with your contractor, because you can't understand every nitty-gritty detail of construction, and you have to rely on good experienced contractors that are in the project, that understand the plumbing, electric, all these detailed framing, these complicated things, that they can explain to you why the change order is necessary. And generally you're like, yep, that does make sense. Although I like the change orders with the guys like, listen, I could do this, and then like I have some extra granite over at the shop or something, or he's like, if we do this, it's going to increase your property value. You got to sell it. You need to kind of
Yep. Absolutely. Yeah, you can't just say, oh, because it wasn't written in the contract. So here's a change order.
Yeah, you got to explain why it has to be done. And generally it does have to be done. Okay. How do you ensure subcontractors do quality work and be on time and perform?
That's a tough one. So generally, just kind of enticing them with more work doesn't always work, right? So a lot of people say, hey, listen, I have 20 other jobs and I have this and I have that. Most contractors don't really care in a way. So like for me, if someone came up to me and have never worked with me and they said, hey, listen, I want to work with you forever. I got, 10,000 other jobs for you. I don't really care. I just care about, hey, can we get this first job done?
Yeah.
And am I going to get paid? That's the most important thing, I think, to mostly any contractor, right? Are they going to get paid on the job on time?
Yeah.
When you say you're going to pay? So the contract is two ways. Don't forget that. So when the contractor basically says, hey, I'm going to do X, Y, and Z, and I'm going to build this, your job as the owner is to make sure you pay them for that, right? Sure. Yeah. And if you're going to provide materials, you provide the materials on time. Don't wait till they tell you, hey, I need XYZ tomorrow or yesterday. You know, so always, especially if you're a little bit more experienced, try to anticipate what they need and try to have that for them. So that's a way to keep things going on time.
Yeah, just be easy to do business with, right?
Yeah,
I mean,
exactly.
Everyone loves someone that's agreeable, cooperative, has integrity. Oh my gosh, the worst is when it's like time for, you get it paid and there's like, oh yeah, well, I need like 6 business days because that's how long checks take. So it's, you got to pay your contractors quick if you want them to do work quick.
Yeah.
Having the materials, knowing what materials are going to need, knowing kind of how much it's going to cost, or materials are complicated. We really try to have our contractors get all the materials because it gets complicated if we're in charge of getting materials and we don't get the right stuff. Also the time to do it is too much. So, but I agree. Just being easy to do business with and paying people quickly. I mean, most contractors I know, you're like, I'm going to give you a ton of work. They're like, yeah, I have a ton of work, buddy. I'm exactly 6 weeks out for you. Yeah.
Exactly. So it doesn't entice them anymore.
Yeah, there's so much work out there for good contract. I mean, good contractors are a year out. They really are. Good ones, we hold them close to the belt. We just keep them busy day in and day out, really. So
yeah, I mean, I get to kind of pick and choose my clients.
Sure.
Yeah.
Good contractor like you, absolutely. And And that's on our end too. Like once we have good contractors, we really try to treat them well, and then we try to be very communicative. Just like with our investors or our tenants, same thing. Whether you're an appraiser or a realtor, whatever, however you work with us, you're investing $1 million or $30,000, or you're a tenant in a studio unit, it's all the same. We want to treat everyone with respect. So it's all right, my friend. Let's that'll do your last question here. So how do you ever negotiate with subcontractors? How do you negotiate with them?
Wow. So it's kind of like going back to the same points, right? Making sure you have a solid, first of all, you want to have a solid contract, right?
Mhm.
Make sure you have an attorney draft up your contract,
Mhm.
right, first. And then you can always go back and modify it, to kind of simplify the contract, but do it with your attorney to kind of simplify things, because you're going to have a decent contract. You're going to have probably 4, 5, 6 pages of, things, right? At least.
Mhm.
So what I did over the years is I kind of simplified my contract to 1 page,
Right.
so that it doesn't scare off, let's say, the homeowner or the person I'm doing business with,
Mhm.
So doing that, and making things fair also, right?
Yeah.
So if let's say the contractor says, hey, I need $100,000 and I would like to get paid weekly
Mhm.
on that $100,000, and it's going to take 6 months to do this project.
Mhm.
There's always a way to negotiate that. Instead of paying weekly, because that's not based on performance, right? That's just
Right.
based on time. So
Mhm.
you want to base it on performance,
Yeah.
instead of just randomly paying him, even though he doesn't show up for 2 weeks straight.
Mhm.
So make sure it's good for both of you, not just for him or not just for you.
Of course. Of
You know,
course. No, absolutely. Absolutely. And that's the challenge when you get in a tight spot with contractors and they're like, well, we spent the budget now, and if you want me to stick around and finish the job, it's going to be, more money every week. I remember getting into situations when I first got started, not having the right contracts in place. So just kind of as a follow-up question to that, then so overall, what are the documents? I know it depends on the job. Obviously,
Mhm.
you're doing like a $20,000 cleanup of a single family home. You're not going to have
Yeah,
necessarily all the things like lien waivers and legal contracts and stuff like that.
that's correct.
Right. So let's kind of talk about, like a smaller level renovation. You're mainly just focusing on the scope of work, right? The contractor's insurance. You probably want a copy of that just to make sure they have it.
Mhm.
Maybe a license if you're looking for that, just to make sure they have it. It depends if they're very reputable or something, like they're the most popular plumber in town. You
Yeah.
don't necessarily like, but I do like to always have a copy of everyone's license, no matter what. Because if there is any case where you have to file suit or something like that, you need their license. Now that is generally public information. You can probably go
Yep.
find it, but it's easier to get a copy, right? So, now then for a larger scale renovation, on these apartment buildings, we're doing a $350,000 renovation right now. We got another million, 1.1 coming up. So something like that, what are the documents you suggest someone has? Then just a quick override there, what you would want to have signed in that case.
So first of all, like you mentioned earlier, you definitely want to make sure they have their licenses,
Mhm.
their contractor's license. They have enough liability insurance to cover, whatever amount your building's worth,
Right.
right? So generally, like let's say in New Jersey,
Mhm.
you want to have a $1 million per occurrence policy.
Right.
Okay, so let's say like at minimum like a $3 million aggregate. Um, and then you want to make sure they have workman's comp as
Sure.
well.
Mhm.
Okay. So so unless they're like a one-man team,
Mhm.
then I don't generally require them to have workman's comp. But because I have workman's comp, I gotta make sure they have workman's comp. Otherwise, when I get audited at the end of the year,
Mm.
I gotta pay the difference.
Oh, wow.
So yeah, so me as a contractor, as a general contractor, that's what I have to have and
Right.
require.
Okay.
Yeah. I actually had someone early on do that to me.
Mhm.
I was working for a builder, and I was just doing carpentry work, and I was just getting my workman's comp, and he actually deducted money from me legally,
Phew.
and I was not happy about that.
Right.
Yeah.
Right.
So, GCs can do that.
Mhm.
It's kind of like a withholding tax.
Yeah. Makes
Right.
sense. I
Yeah.
mean, taxes are killer, I mean, it's crazy what, we're hiring a new bookkeeper right now. We're thinking, okay, 55,000 a year. And then you're like, wait a minute. It's actually, if I pay someone $55,000 a year, I'm really paying about $61,000 a year, because payroll tax, everything's about 10% on top. Social Security, like that's
Yeah.
going to be around for my 30-year-old staff members, geez, Social Security, what a scam. But anyway, that's a whole different webinar. All right. So no, that's great information there. And the scope of work, of course,
Yep.
very in depth, depending on the project. I mean, listen, you're renovating a single apartment in an apartment building. Obviously, it's a much simpler scope of work, but you're
Yes.
adding a level to an apartment building or something, that's going to be something different. And then you're talking bonds, you're talking lien waivers, things like that.
Yep. Exactly.
So that's good. Yeah, generally jobs for like 20,000 or less, like quick apartment renos, we're not doing all that. We're generally having a scope of work, and it's with contractors we work with already. So we have their legal docs already, their insurance, their licenses, and then we can get, but once you get that flow going, doing smaller projects, it's not as complicated as it seems. But when you get into the bigger stuff, especially ground up construction, commercial renovation, add levels, it gets very complicated and very risky. So working with a good general contractor like yourself, I mean, a lot of the things you said tonight, even I learned a few things here, and in this 10 years. So, it's construction's like a whole different beast. I'm in the, fundraising, client relations, marketing, branding end of real estate syndication.
Right.
I'm like way over here on the other side of the office building, your construction's like totally in-depth operations, Yeah. Yeah.
It's a whole different department.
Whole different department, man. Whole different department over there.
Yes,
Okay.
yes.
Good stuff.
All right.
Yeah. Why don't you ask me my questions?
Yeah,
right?
yeah. So that's exactly what I was gonna do. So
Once I stop talking, then.
no, it's all good. So let me ask you, what are the steps you take to underwrite an apartment building?
Sure. So, when I focus on underwriting apartment buildings, first thing I try to do is everything that's free, right? So, we look at so many deals. We have to be quick with them. You have to be smart with your time when you're running a business, when you're doing anything. So, we'll look first at, the rent roll, kind of identify the value add opportunity. Generally, we're looking at deals from brokers or wholesalers. So you kind of get an offering that's going to explain the details and the numbers, but that comes with a grain of salt, right? Because whoever sends you the deal is trying to sell you a deal. They're not on your side of the table, my friend. No matter how much your broker likes you, your wholesaler likes you, you guys might get along and be invited to each other's family barbecues. But when it comes to selling a deal for millions of dollars or even $100,000, they're on the other side of the negotiating table. So you can be respectful, but you're also going to need to do your own due diligence. But listen, I look at their numbers, I digest their numbers. Usually they're pretty close to accurate. I look at their comps. Those are always helpful. And then I'm going to go do my own digging. I'm going to figure out what's the real value add opportunity. What's the difference between where the rents are now and what the market is bearing, what I could ideally renovate the units and get for those units in a fair market. And then I'm going to look at different comparable sales. Hopefully I'm familiar with the market. I'm familiar with rental comps in the market. What are other buildings around there selling for? What are they leasing units for? What capitalization rate are the buildings selling for? And a capitalization rate's a quick formula to figure out what a building is worth based on its net operating income. In less desirable markets, you're going to have a higher capitalization rate. In more desirable markets, you're going to have a lower capitalization rate. So I'm going to need to know my cap rate for that market, right? Already, you got to know your markets and then apply that to the net operating income of the property, which is a number I probably got from my realtor, which has probably got a bunch of, I forgot the landscaper. Oh yeah. Oh, there's garbage removal. Oh, not here. Garbage disappears itself here. So you got to make sure all those expenses are in there that whoever's trying to sell you the deal forgot, mistakenly, of course. And then you're going to go ahead and give it a real value, right? And say, okay, is this quick cap rate? Right, my cap rate's 6% in this market. My net operating income is $200,000 for my broker, but he missed like 20 grand in expenses. So it's really like 180. Boom, 6% divided into 180, or is it 180 divided into 6%? It gives you the value of the property. And right there, right? So, okay, they're asking $5 million for it. Well, I know this thing, this many units in this market isn't worth more than 3.5 million. I'm not going to bother digging into it, right? Or they're asking $5 million for it. Holy mackerel. Actually, everyone else with this type of buildings asking 6.5, and he's a 5, and actually he's not, we could work with this. Or there's value in this building no one sees yet. I know what's going on in this market. I know the rents he thinks they can get for the building are actually low. We can get more than that. Or I see that they're not charged. There's a whole, area they're not charging for parking, storage. There's things on the property they're not taking advantage of, or not including, in the rent or whatever. So there's laundry that's not in the units. There's no laundry in the building, right? Where do they do their laundry? Well, that's going to attract the wrong quality tenant. Now, if you put laundry in the unit, all of a sudden you're going to attract a more quality tenant. I personally wouldn't move into a space without laundry in the unit, right? It's just a nice luxury I'm going to want to have, and there's a certain tenant you're going to attract with that. So that's something, wow, that's a value add I can get, then I get more in the rent. So you want to know your market, know your value add, see that opportunity there, and then you're going to dig a level deeper. You're going to go into ask for more information on the property, financials, vacancy reports. You're going to then try to identify, get as much financials as you can. Once you put the property in a contract, then there's financial review. You're going to get trailing 12 months of collections, maybe 24 months of collections. Try to paint a picture of the property, what tenants are paying rent, what tenants aren't paying rent. Try to understand how much the landlord's putting into the property, capital improvements, things like that he's done through the years. And then, OPR requests, figure out what open permits there are with the town, things like that. You're going to have your standard title search. Your title company's going to take care of that. You're going to have a physical property inspection. You're generally going to hire a professional inspection company for that. You're going to get a big, long report. That's where you're going to possibly renegotiate with the seller, or you can renegotiate with the seller on the financials as well. That's another question. We'll talk about that later. But then that's your next level due diligence, physical, financial, title, legal. You're going to have your attorney look into issues. Maybe there's an HOA or whatever you're looking for. Environmental, you're gonna have a tank scan of the property. Generally, if you don't find a tank, you're not going to really go beyond that with any soil tests or anything like that. OPR reports are kind of considered environmental as well. It's all kind of wrapped in there. So those are just off the top of my head, a number of the due diligence factors you do when looking to a property, and any bigger issues in there, you're going to just dig in deeper.
Yeah, pretty thorough. Thank you. So I'm not sure if you kind of answered it or not, but what are some of the red flags, you look for and when you're underwriting the apartment building?
Sure. So generally, owners and brokers are going to paint you a rosier picture than is really going on, as I said. So, collections, right? You really try to find out the collections. The first apartment building I ever bought, I made a mistake. Okay. And the owner sent me a bunch of bank statements, and they showed all these rents coming into the property, into the account. Now, the problem was the rents that were coming in didn't really line up with the rent roll. And he would say, well, that's because a lot of tenants don't pay the full rent. They'll pay a little now, they'll pay some later. And some of them just are catching up. And he kind of had an excuse for everything. And we said, okay, well, that kind of makes sense. And plus, these bank statements are very complicated. He was also running a construction business out of the same account. So you better bet making sense of it was difficult. Moved to buy the building, we realized about a third of the tenants weren't paying rent at all. The owner, the past landlord, had tricked us. He had a number of properties and a number of construction jobs and just different things from his business paying into the account. And he called it all rent. And a lot of it was rent from other properties, but he said that was rent from his properties. And it was hard to identify who the money was coming from. So he had tricked us, showing income from other properties, saying that they were from this property. Now, the greatest part of this whole thing was he was actually the town inspector too. So we had to deal with him for permit inspections and construction inspections for the 2.5 years we owned the property. We learned a lot through that process too. We sold the property for a nice profit. It all worked out. The investors actually did better than targeted. So it all was good at the end of the day. We learned a lot from that first 25 unit flip. But that's when you're looking at, the owner's trying to trick you or confuse you, that's a red flag. Now, listen, a lot of times we look at the financials and the property is a mess, and that's what we buy. If you buy like beautiful, perfectly running construction buildings for top dollar, you don't make any money in this businesses, right? It's
You gotta
not
wait for
reposition.
appreciation, right?
Yeah, right. You sit back and hope the market goes up. That's not really a good plan. Although there's some investors planning, it's better than nothing. But the bottom line is when you can control a building, you can reposition it. Like we're buying a building right now, rents are 25% below market value. We're just going to renovate the units better than they're renovating them now. We're going to make the gym actually a gym instead of hold construction material for the owner, which it's doing now. And we're going to make the common area a little bit nicer as well, spruce up the outside. And overall, the building's going to be a lot nicer and the unit's going to be nicer. But we expect to rent the units for what they're getting for now, the renovated units, what they're leasing renovated units for right now. So, we're going to do all these things to the property, probably get more than what they're leasing renovated units for right now after we do all these amenities, but we're going to kind of be conservative and expect the rental market to soften up possibly. So anyway, in that scenario, we know the building's not collecting a whole ton of rent. We know that there's 36 units we're going to need to renovate. We know there's 10 units not paying rent right now, 10 tenants. So, that's out of 63, right? So like 20% of the building's not paying rent. And so we're okay with that. So, here's what I did. We negotiated $100,000 escrow for the seller the attorneys to hold after we close, right? So we actually came up $100,000 to get the deal done. And then we said, but we want that $100,000 to be held in escrow for like basically indefinitely, as we reposition the units and as we work those tenants that are going to eviction court through eviction court. So there's 10 tenants that are not yet to eviction court, but haven't paid rent for some time. And so instead of not collecting rent from those 10 units while we wait for eviction court to happen, which with COVID and everything, it's all kind of backed up, we're going to collect. Right? We're going to collect rent. We're going to collect off that $100,000 escrow. And every month, at the end of the month, we're going to say, look, $10,000 in rent is due right out of the escrow. So now, sure, we're buying a mismanaged building and we're going to be, having challenges as we move tenants out, renovate units and release them. But that cash flow coming in from the escrow is going to really help, right? So now we're able we're able to collect essentially income from units that really aren't paying income. We know that going in. So I protected myself with $100,000 escrow. And now if it takes 6 months to remove those non-paying tenants, that's okay. I'm probably going to exhaust that escrow eventually, but that's okay because we're going to get all that capital back, and that's going to help us with cash flow, help us pay our investors properly, hit way above our targets ideally. So
that's awesome. Mm-hmm. Now, is there any deals that you would absolutely kill? If is there anything that would cause you to do that?
So red flags that cause me to kill a deal, right? So in the scenario where, hey, there's 10 tenants not paying rent, I'm not going to kill a deal over that. I'm buying a mismanaged building. Like I know your tenants really aren't all that good, right? If you had an A+ building with A+ tenants, you probably would be selling to me for a discounted price. So right, so let's be realistic. But yeah, I mean, there are definitely red flags. Non-paying tenants is not one of them. Structural issues is one of them. Structural issues can be a pain in the neck. They can cost way more than you think. They can cause you to possibly rebuild parts of the building. So that would probably, depending on the seriousness of the structural issue, we would not move forward because we're not really a construction company. We're a repositioning company. We want the easier renovations, not the crazy structural stuff. Other things that I'm going to kill a deal over are going to be environmental. Although I have moved forward with underground oil tanks, I don't like them, right? I mean, I'm going to be a hard negotiator with underground oil tank. I'm going to get at least like $100,000 off. Give me $100,000 off. I'll close, like that's a safe cushion, right? And then probably going to cost me like 15 grand to 20 grand. Like if there's a issue to clean up,
right.
Right. I've seen it be worse. Like it can definitely be worse. Leaking oil tanks can be an issue. But here's the thing about leaking oil tanks. If it's leaking into the groundwater, your property insurance has to pick it up pretty much. It becomes a larger environmental issue. And then your property insurance will pick up the cost, and it really is out of your hands. Your insurance rates might go up, but for the most part, your insurance company's going to cover that. And that's why you have property insurance. If it's not leaking into the groundwater and it's a lesser of an oil tank issue there, or contamination, then you're probably looking at $20,000 in my experience. Maybe that's gone up a little with inflation. But right, usually the pop the tank out, it's like $3-4 grand, and the cleanup's another like 15 on top. If you're ripping up driveways and stuff like that, I mean, they can get pretty bad pretty
Right.
quick. But you get me $100,000 off. Well, now we're talking, right? If it costs me 30 grand to clean up the whole thing, hey, that's a
Yeah, you
great
just made some
negotiating.
money.
Yeah, right. So there you go. But yeah, I need that money. I've also been, found an oil tank, and sellers are like, so what? It's a good deal, and I'm like, nah, I'm not gonna do it. You're not gonna give me anything off. I can't do it.
So
And then, yeah, well, oh, sure, yeah, go ahead.
yeah. So how do you renegotiate with the seller after you find an issue?
Sure. So, yeah. Once you find that issue, right, you really have to explain, first of all, here's an issue. Okay, I'm serious about your property. I've spent a lot of money to get here. I'm doing a ton of research on your asset, and I'm giving you a ton of information for free right now. These reports cost me thousands of dollars. So you're welcome. Secondly, any buyer is going to run into this problem because, well, now that we found an oil tank and disclosed it to you and your broker, you have to actually disclose it to everyone that buys your property. And in some towns, like a septic fails or something, like the town automatically gets notified by the septic inspector. So like, no matter what, if someone pulls an Oprah report, it's going to show your septic failed, right? So if you're buying like a residential property, a good negotiation tactic is, listen, everyone now knows you have a failed septic, right? I was dealing with a guy trying to buy a primary residence last year. Market was super hot. This guy kind of was acting like a hot shot. In retrospect, I probably overbid on the property because, it's such a crazy hot market for primary residences last year, still is, but, and the septic failed, right? So I'm like, listen, buddy, your septic failed. I need to put a new septic. It's 50 grand. I want 50 grand off, or I want you to put a new septic. And, he insisted that it works fine. He's not, take it or leave it. There's the door, right? I was like, all right, that's fine. I'm going to head out. But hey, by the way, the health department is now aware that your septic failed, and any buyer that does their homework is going to find that out. And your broker has to tell the next buyer's agent that the septic failed. So anyone who buys your home is going to need 50 grand off. So it's either going to be me or the next guy. You want to wait 4 more months to get to this point again, or you want to just give me the deal, So, now he still didn't give me the deal, right? It doesn't always work, right? And he sold the property for $50,000, like exactly what I said happened. And it made me feel great. And I bought a much better home for a much better price with much more square footage and land, and an area that I like more 3 months later. So it all worked out.
That's good. Have you ever killed a deal because you found something in the due diligence in the past?
Yeah. So, yes, absolutely. And I've actually lost money, well, first of all, you lose money on the inspections.
Right.
So, you're always going to lose that if you don't move forward on a deal. I've also gotten into scenarios where the deposit goes hard, right? Because like you got to snag deals sometimes, especially like when we were really buying a lot of fix and flips. Seth and I have done like over 50 fix and flips. So in a hot market, sometimes you do have to go in and be like, hey, I want the deal. I need the deal. I'm going to sign here. I'm going to put the deposit up, and then you're going to go do your kind of more physical in depth. Now you want to try to do as much as you can before that, right? But for example, like a sheriff's sale auction. Okay. And I'm not saying this is a great strategy, but I'll just give an example. Like, we'll put up, we'll go to sheriff's sale auction. There were hundreds of properties. We don't always have the chance to drive by every single one. I don't know if you had a team doing it when we were all like,
listen, I remember bidding against you back in 2018.
Oh man, it was fierce. It was awesome.
And we drove every property. I don't know if you knew that, but we did.
See,
we made a list, and we had a mapping software, and we drove. Well, we narrowed it down, obviously, to the ones that we wanted to bid on. But yeah, we did.
Here's how so yeah, we did a ton of sheriff's sale auctions from like 2015, like 2018. And then it just, everyone and their mom came to the auction and the prices shot up, and I haven't gone back since. I've been there in 3 years.
I haven't been.
It was a gold mine. Like we ran the numbers. We made like over $1 million in wholesale fee. We couldn't believe it. It's a crazy time. So great deals. And so when we worked it out, we used to have staff go around to the properties. first of all, the people I was hiring, it's like they wouldn't stick around. You know, the notes they were taking were really not reliable at the end of the day. And then like you try to get someone that really knew what they were talking about, like new real estate, and they wanted a lot, and it didn't really make sense. So we actually ran the numbers. We said, wait a minute, it costs us about $1,500 to like $2,000 in like legal fees and court fees, generally like maybe $2,500 most to get out of a sheriff's sale auction, right? Because you can hire an attorney and try to work, you know, and not lose your deposit. We've done that before. So we said, okay, you know what? Actually, the cost of the legal fees and the court costs of getting out of a bad deal is less than the headache and the labor cost of having people drive around all these properties, and also give us like not so accurate notes sometimes too, because you're talking about like 200 to 300 properties a week, right? And you also got to renovate them or wholesale them, right? So you're also we're moving a ton of deals,
Yeah.
and then we're acquiring a ton more. So we're building up our business, building up our management company. So it's been a busy time. And but yeah, so we figured out that it actually costs us less money to just bid confidently and, you know, as wisely as possible from Zillow and like a few other things we would look up. So we had a researcher who would like look up the properties, because the problem was they put so much online, you didn't really know the list until like that morning. You know, if you wanted like an accurate list of what was coming out in Essex County, right, or any county, really, you got to go like that morning and get it. So we'd have like a researcher go to the courthouse that morning, do the research, but it wasn't like totally in depth, right? It's like basic comps, basic, you know, and then we really wouldn't do a drive-by. If it was like a higher priced piece of real estate, we might. Maybe I select like 3 or 4 I'll drive by myself, just to kind of like lay eyes on, you know, but for the most part, we knew the market well enough. And there were times where we bid on real estate and then drove by and realized it was a burnout or it was a, you know, terrible investment wasn't going to make sense. Yeah.
I remember the one you bought. I forget the street, and I saw that property. It didn't even have a second floor. Like the second floor floor joists were gone. I don't know if you remember that one. I don't know if you've ever even been
Was it
there.
in Belleville?
I don't think it was Belleville. I think it was like either North
like
Newark, something like that.
Oh yeah.
Something like that.
You know, I do remember. I think I actually like a lot of them. I would just, you know, if we were moving about 2 or 3 a week at one point, and it was just it was inventory, right? Some of them you broke even on. Some of them we made $120,000 on, right? Some of them we lost $2,000 to $3,000 on. But at the end of the year, it was a huge profit margin, right? So it was a numbers game, you know, it was a number, and we would go in there with the crazy part, we would have like $200,000 in promissory notes, or not promissory notes, what's it called? Certified checks, like, you know, in you're driving to the event, yeah. And it's not like a single certified check for 200 grand. It's like a bunch of 1,000s, a bunch of 5. We would go to the bank and they would hate us because we want to put the money back, like, because it, you know, it was investor funds. So we felt like, you know what, we didn't want to drive around certified checks all week. So we put the money back after the auction that we didn't use. So every week we'd go to the bank and get a new round of certified checks. They would like make fun of it. It was crazy how much work it was. But Wells Fargo cut us a good deal. We got free certified checks. So we'd have this big stack of certified checks, like 200 grand, go to the auction, scoop up maybe 100 grand worth of real estate, flip it for like $1.50 to $1.75, do the same thing next week. We made hay while the sun shine. I wish the market was like that again. It was amazing.
We do have a question, but we'll get to that question. It's kind of related, and then I want to ask you the last question, and then we'll probably jump back to that. So how do you keep a reposition on schedule?
Well, you know, similar to what you were saying with managing contractors, managing subcontractors. So generally with a reposition, one of the hardest things you're doing is working with existing tenants, right? So you have basically 3 different ways you're going to remove tenants. The first way is the most amicable way. The lease expires and you're just like, hey, I'm not going to renew your lease. Here's your 60 days notice before the lease expires. And generally there'll be another 60-day period you'll give them to kind of move out beyond that. So it tends to be about a 4-month period where you're not going to renew the lease and the tenant will move out in an amicable way. And you try to give them the security deposit back too if they cooperate. So second thing you do is a cash for keys. Maybe there's a scenario where tenants not being cooperative and not moving out, you are looking like you're going to have to go to eviction court. It's looking like it's going to cost you some money. So you're saying, okay, you know what? Let's work out a $2,000 payout, cash for keys, something like that. And that's also an amicable exit where you're going to work out, help the person with the moving costs so they can easily exit the building and move on. And that allows you to have a nice unit renovated there, vacant as well. So the third way is eviction court. We try to avoid this, but this is where we end up sometimes with non-cooperative tenants. And of course, that's going to allow you to vacate the tenant over time. But in a blue state, depending on what county you're in here in New Jersey, it can take you 2 months or 18 months with COVID. So it's tough right now. Yeah. Okay, so then let me continue there. Okay, so that's how you get tenants out, right? So that's the first part, right? Now, okay, we have a vacant unit. All right, hooray. The work now begins. You need to get the unit renovated. Now, the good news is we focus on buildings where you're talking paint, vanities, fresh appliances, fresh countertops. Maybe we work with the cabinets. We already talked about this, and we're going to put it right back on the market. Your contractor should be done with that in about 15 days. Any good contractor with a small crew is going to be able to get most of that done in about 15 days, depending on, maybe you have some lighting fixtures or something you might be doing. But we never require permits. Like very rarely do we require permits for what we're doing. We're never talking architectural drawings. So we're really just renovating an existing unit, getting it right back on the market. At the same time, we're going to be in like the building we're buying, for example, the gym has his and her locker rooms, 4 saunas, and it's being used for construction material storage for the owner. So an obvious play there is to clean out the gym, put some equipment in there, and give it as an awesome amenity to the tenants.
Yeah.
Now you're going to attract tenants that exercise, tenants that take care of themselves. It also has a parking garage in the basement. That also attracts quality tenants. So we're trying to attract a demographic that's going to be a good quality tenant, a nice place to live, a family-friendly environment, young couples, young families, things like that. People of all demographics, really a nice place to live. And that's what we do in a lot of these inner city areas. And this building is actually in Trenton. So we find opportunity there where we can kind of take a mismanaged building with, in this case, rents 25% below market value. We'll be renovating 36 units throughout. Hopefully we have amicable exits, but we already know that there's 10 tenants not paying rent, right? So we talked about how I have the seller holding an escrow for that. So we're still collecting cash flow on those units, even though they're not paying rent. And then we'll work them through eviction court over time. So it's a lot of improved management. It's a lot of heads up renovations. What are we renovating? What are we not? The common areas we're going to improve. We're going to make them nicer. The outside of the building, the curb appeal. So we're dealing with different types of contractors at different times. We're going to use a different contractor to spruce up a unit than we are to, take care of the outside of the property, ideally, right? So, right. And if there's bigger projects, we're going to have a different contractor take care of that, right? So, but really you're just managing a lot of small building small unit renovations overall, then like common area renovations. And then you have your management staff kind of getting the units ready for, vacant for renovation as well. And your management staff is going to be negotiating current leases with existing tenants and increasing those leases up as well. And those existing tenants are going to be like, all right, I'll pay 5% more rent if you fix my leaky dishwasher, right? So now you got to have your handyman or your like supervisor on the property. He's the leaky dishwasher guy, right? So that's like your bottom rung, right? Your low level stuff that needs to be fixed. And then you have your second level, like apartment building renovations. And then you have your more higher level stuff that we actually try to stay away from. That's going to require permits or architectural drawings, maybe add a level or possible structural or environmental issues, or just like updating your HVAC system or something. That's going to be an HVAC specialist, right? So a general contractor could manage all this. You could have a project manager managing it. You could have your management company kind of overseeing it. I mean, no management company is going to really be able to do all this except a repositioning company, in my experience. But so that's why we create our own management company. But yeah, so you're managing all those things at once. And you really have different branches working together.
Nice. Thank you for that.
Absolutely, Joey. Absolutely. All right, so that was our question there. Did you see any more questions on my end?
No, I think I'm done with the questions. We do have a question from audience though.
Sure.
Yeah. So his question was, do sheriff sales and foreclosure sales still work at this time?
You want to take this one, Joe? What do you think?
I I think it probably works since sheriff sales came back. It was kind of offline for a while, during COVID. So
Mhm.
it just came back a few months ago. So it can work as long as you have good strategy. But I personally haven't dived back into it. So,
Yeah, yeah.
and yeah.
I mean, my single best source of real estate deals was the sheriff sale auction. I've never found a better. I've had billboards. I've done tens of thousands of dollars in direct mail marketing. I've taken top brokers out to lunch every year and told them how good looking they are. All those avenues get you deals, but the single greatest source of great deals, like the deals I like brag about at the bar with my friends, like those deals are from the sheriff sales. So right now, I haven't gone in 3 years. They suck. They're completely saturated with a lot of people with capital to put to work. They should go to peoplescapitalgroup.com and learn more. And I think that a lot of people are learning how to buy real estate at a sheriff sale auction, and I don't suggest that. And it's the hardest way to buy real estate. It's the most serious way to buy real estate. It's the most risky way to buy real estate. It's also the most profitable way I've ever bought real estate. But there's a reason I haven't gone in 3 years. It's the prices are bid up way too high. The banks are even asking way too much. The reason it was so good when Joey and I were going in 2016, because the banks were giving away the real estate. There was a disconnect between the amount that the lien holders were willing to accept and what the market was willing to pay for the real estate. And that's why people like Joey and I cleaned up, because we were in the right place at the right time, and we had a few $100,000 laying around. That helped a lot. But basically, right, the lien holders were like stuck in 2012, 2013, 2014, right? And they're just trying to get these assets off their books. And they're like, we'll take whatever we can get. And in like 2016 came, the market turned and everyone wanted the stuff. And we knew how to get it for a good price and put it out to a bunch of buyers in an understandable, editable way. So my buyers could digest the deal, say, okay, I like this. I know Aaron. I can put up a deposit and buy this deal. Sure, he's going to make 20 grand, but he looked at hundreds of properties. He's got staff running around looking at properties, and he's trying to bid against Joey there. And it's worth it. He's kind of doing a service to bring me this deal, right? So it worked then. And the lien holders were willing to take less. The market was willing to pay more. Now you go to the sheriff sale auction, and the price you're paying is equal to the market's paying. The market has entered the auction. The word has gotten out. So, you also have to put down a non-refundable 20% deposit. And as I was saying earlier, there are ways to get that back. You got to hire an attorney. You got to have kind of a good excuse. It doesn't always work. But that's pretty risky. So you're probably better off just, buying a property through a good broker or wholesale to get started, kind of guide you there. And right now it is tough to find a good deal, but I think that's about to change in the next 6 months. We'll see.
Yeah, the market is definitely shifting from what I see.
Mm-hmm.
We put a couple of houses that are slightly renovated to fully renovated, and we've had a few buyers back out. Thank God they're all under contract now, but beforehand we've had buyers back out.
Yeah, well, that's what I'm doing right now. I'm running cap rates at a higher number than they are right now. I'm running interest rates at a higher number than I'm even being quoted right now. I'm putting straddle agreements, interest straddle agreements, terms in my LOIs right now. What that means is, for example, if the 10-year treasury goes up by 100 basis points from, let's say I make an offer tomorrow, June 15th, and I say I'm going to close September 15th, okay, on your apartment building. But I'm worried interest rates are going to go up. So in that contract, I'm going to write in, if interest rates go up by 100 basis points, and the difference is between June 15th to September 15th, then the price of the real estate will drop by 2%. Okay. If interest rates go down by 100 basis points between June 15th to September 15th, then the price of the real estate will go up by 2%. Okay. Now, me and you both know interest rates are not going down by 100 basis points in the next 90 days. They're much more likely to go up, maybe not 100 basis points, but something around there. If they do go up by 100, that's a lot. That's scary. And I do need 2% off if that happens. If we go up by 90 basis points, then I screwed up, right? But hey, what are you going to do, right? It's a good investment anyway. So no, you want to have that in there. That's a nice way to kind of protect your interests in the instance rates go up a lot.
Yeah, no, that's a good call. That's a good clause to have in there.
Yeah. And here's another question from the crowd here, Mr. Chen. He's asking, can you talk more about the market in the next 6 months, 1 year or longer? Yeah, I mean, right now, the space I'm in, real estate syndication, buy, renovate, refinance apartment buildings. My investors ask me all the time, hey, Aaron, what do you think the market's going to hold? Should we hold off on investing now in deals you have guys have coming up? And the answer is, so we buy value add apartment buildings, right? So we have forced value we can put into the property. We don't feel like the rental market's going to take a big hit. I don't really see rental prices taking a huge dip in the near future, or really anytime soon. Inflation is still sky high. That's pushing rent up. The cost of housing is going to probably hit a max pretty soon. Okay, right now, the cost to own a home is much more expensive than the cost to rent a home. For the first time in a while, it is kind of back and forth a little while, but for the most part, with interest rates going up, it's less affordable to buy a home. So what are you going to do? You're going to rent. So I think the best place to be right now is things like apartment buildings, but not just apartment buildings you're going to buy and hope the rent goes up, because that's not going to happen really much, probably for the next, there's going to be some headwinds here, right? So rents might be stagnant. So that's what I think. When I underwrite a building, I underwrite with higher cap rates than we have today, higher interest rates than we have today, lower inflation than we have today. I assume inflation goes back down to 2%, which is kind of ambitious, but it's going to make you even more conservative on your offer price, right? Because if you assume inflation stays at 8%, your values are going to be like sky high in the future. You can't assume that. You have to assume inflation taps back down to where it's 100-year averages, which is 2%. So again, I think less people are going to buy homes. I think it's going to be more opportunities to buy flip opportunities. Maybe the sheriff sale deals do get better. People, less people go. There's more foreclosures happening. We need foreclosures to happen again. That's a healthy part of the market. Without foreclosures in place, there's no way to move properties from people that are unable to pay those debts to people that can then renovate the units, create tax revenue for the city, pay service providers and sell the units to a family or rent the property. So that needs to happen. That's a natural part of our market. It's a natural part of our economics. So as foreclosures happen again, that's okay. It's going to allow us to kind of get deals again. I don't see rentals dropping a whole lot. I really don't. If you have a nice building in a decent market, you've renovated units with the right amenities, people are going to continue to pay for that. People are getting paid more right now. Their income is going up. We're hiring a new bookkeeper because our bookkeeper got paid like a 40% higher offer at a different company. Like, and there's no way we can match that. So great for her, right? But tough for us. So that's part of this market we're in right now, right? So people are moving on up, getting paid more, and that's part of the challenges business owners have. But that's good for employees. That's good for the workforce, and that's going to allow rents to stay strong. But if you're trying to buy a primary home, maybe hold off for 6 months, see where the market goes, right? I can only imagine single family homes are going to come down in price. And the question is, are apartment buildings going to come down in price because of interest rates rising? And that has yet to be seen. We have to, I know that institutional buyers right now are kind of laying off. I know rent growth continues, but interest rates are a wild card we have to keep an eye on. So we want to only buy really good value add real estate with a ton of value add that we can control. We know we can increase the value of the property, even if rents go down a little bit, even if market values go down a little bit, cap rates go up. We're still in a good place. We bought for a good price with controlled forced equity.
That's an awesome answer.
Yeah. I could just talk about real estate like all night, man. I don't know.
Yeah.
Oh,
Right.
Okay. Well, I do have to get home to my wife and my 9-month-old son.
Yeah.
Little Dino. He's already asking about cap rate. You go, cap rate? Not yet. Okay, I'll explain you a cap rate. That's okay. What's a healthy cap rate for an apartment is another question here. Well, boy, I'm going to need a good 30 minutes on this one. No.
I'm going to give you a quick, I'm sorry,
Yeah.
jump in.
Depends on
I'm
the
gonna give
market,
you a
right?
quick
Yeah.
answer.
Give a quick answer, Joey.
It
Quick
it
one.
really it really depends on your market, right?
Mhm.
So, depends on what market you're in, right? In Trenton, New Jersey is one cap rate, and in Dallas, Texas is another. So
Mhm.
I'm gonna let you get into the finer points, Aaron.
No, 100%. Yeah, you're absolutely right. That's it. That's the best answer you can give. Depends on the market, right? In Manhattan, there's negative cap rates sometimes, which is crazy. And then in other areas, we're buying at about a 6 cap right now, and about 6.25 cap is what we're buying out in Trenton. In Newark, the cap rates used to be at like 7 or 8, and really soft markets. Now it's there's 5 caps in downtown Newark. So it depends on the market completely. You got to know your market, and then you'll know your cap rate. A broker can usually guide you with what a market cap rate is going to be. A good broker will know that, commercial broker. Mr. Mark says, hope he's doing well. He's son did the Fed increase the interest rate today. Oh boy. Yeah, my son's probably been watching CNBC all day. Saying, stupid Fed.
I
Fed's too late.
I think the meeting's tomorrow, no?
Yeah, that's right. Yeah, tomorrow. Yeah. I think it's tomorrow. Yeah. I mean, listen, they're going to increase interest rates. They need to increase interest rates. The Federal Reserve is the adult in the room. They stopped the party too late. They should have started working the trickling off their balance sheet a year ago. As far as I'm concerned, they should have started raising interest rates very slowly, probably more like a year and a half ago. But the COVID came, everyone got scared, and then the market kind of got like really strong. And we should have just said, listen, sure, there's a pandemic going on, but this is a strong market. And a year ago, the Fed should have started taking action, but they waited too long. So now we have 8.6% inflation. And
Is transitory, no?
yeah, no, don't worry. Listen.
Uh,
Janet Yellen knows what she's talking about. It's transitory. Okay. When I look at Janet Yellen, I have the utmost confidence in our economy here. Utmost confidence. She seems like a nice old lady. I'm sure she's fun to get like some tea and pie with, but it's like scary.
Don't talk
sometimes.
economics.
Yeah, transitory. Everyone knew it wasn't transitory. Who's paying her? Man, oh man.
The U.S. government.
I'm telling you, if you really
we are paying her.
Really knew what if you really knew what Fauci was getting paid on. That's all I'm saying. All right, I'm gonna stop right there. I'm gonna stop right there. That's a whole other webinar. Okay. Anyway, so yeah, we'll see where the rates go. Again, we're going to focus on being very conservative when we buy real estate. That's what we do here, People's Capital Group. We estimate the market will slow down. We write that into our numbers. And that's part of having really in-depth spreadsheet is knowing, okay, you're going to say over the time, the market values are going to soften up. And then also markets come back, right? So 5-6 years from now, you want to recognize markets are going to come back. I mean, maybe not that long. I think we're probably going to see a 6 to 18 month slowdown. And then I think we're going to be okay. Overall, we're not looking like we looked in 2008. That was a very different scenario. I do think stock market's going to drop another 20%. I do think my crypto portfolio, I will never want to look at it ever again. And
Me too.
And I hate cryptocurrency. It's the worst thing I've ever invested in. And yeah, so that's what I've learned in 2022 so far. Yeah.
Buy more apartment complexes.
More apartment complexes and less cryptocurrency.
That's right.
I learned that one the hard way. I'll tell you that much. Yeah. All right, Joey, excellent. So here's what I'm gonna do for everyone here. I'm gonna put our website here to take a look at our upcoming offering. You can go to that website I just put in the chat to everyone. So since we run a 506B, we can't actually solicit funds this time. What that link's going to take you to is our Syndication Pro site, where you can create an account, log right in. You can take a look at the picture of the property, some basic numbers on it, but no details really. There's going to be a link to schedule a discovery call, and that's going to allow you to connect with me, Aaron Fragnito. We can talk for about 15 to 30 minutes, figure out your investment goals, see if they align with what we do here at People's Capital Group. And we've been helping people invest in apartment buildings for the last 10 years. And if you want to find out more, you can go to our website, peoplescapitalgroup.com. You can also click the link I put there to start an account on our syndication software, so you can get signed up to review upcoming deals as they come available. Again, we do have something coming up, 63 units here we talked about in a few weeks or so. That's exciting. And Joey, how can people connect with you?
Yeah, same. So just look for me on Facebook, Joey Chan. I'm gonna put it here. And look that up. You can just instant message me on Facebook Messenger. Otherwise, you can also find me on you can email me. Here, let me see. And I'm also gonna give out my cell as well.
Wow.
So if you need anything from me, we can talk about anything. Renovations, contracting, fix and flips, wholesaling, buy and holds, apartment complexes, anything. All right.
Dating advice. No,
Thank you.
no dating advice, right?
No dating advice. Definitely not.
Okay, good. That's where you draw the line.
Yeah.
All right, excellent. No, thanks for coming on, Joe. I really appreciate it. We
Thank you
covered
so much.
a lot of stuff tonight. So for our listeners here, we talked about, everything from sheriff sale auctions and how that worked, kind of the inner dealings of it, and how we made hay while the sun shined, to analyzing apartment buildings, red flags there, renegotiating with sellers, and then just buying real estate now in this kind of strange time where we have high inflation, kind of a looming recession possibly, and just being smart with what you're offering, how you're analyzing buildings, and then managing contractors, managing construction, the challenges there within, and knowing how to get the right paperwork in place for your subcontractors so you're protected in the event they don't cooperate. So yeah, just a ton of information tonight, Joey. Really cool stuff.
Yeah, absolutely. Enjoyed it.
Yeah, me too. These are fun. This is the most favorite part of my day is engaging with people and engaging online here, doing whatever we got to do. So what we'll do with this presentation here, we're going to put this out on our website, peoplescapitalgroup.com. So you guys will probably get an email and a little bit for that. Also, Zoom's going to send you an email tomorrow, and that'll give you a link to our Facebook page where you'll be able to view this as well on Facebook. There, our Facebook page, Real Estate Investments, and we'll put it on our Facebook group, People's Capital Group Investor Community. So there, and our website, peoplescapitalgroup.com as well, where we'll put we have tons of educational videos, blogs, and podcasts, and more information about how we help people invest in real estate here in New Jersey. So that's it on my end. Any farewell words, Joey?
No, I'm good. Thank you very much. Thanks for coming on and watching.
Awesome. All right, everybody, I'm going to leave this going for a few more minutes, but I'm going to check off here. Thank you so much for coming tonight. Those links are in the chat. So Joey, make sure you sent that to everyone, Joey. I think you sent it to host and panelists, but you know what? I'm going to copy and paste it here. Send to everyone. There you go. So that's Joey's information in the chat. That's our website there to sign up and review information for upcoming offerings on our end at People's Capital Group. You can also go to peoplescapitalgroup.com. So I'll leave this running for a few minutes here, but I'm going to check off Facebook here and check off myself as well.